Looks like we had quite a day in the markets.
Quite a mixed bag, for sure.
Tech especially seems to be taking a hit.
True, but I think we have to remember that market fluctuations are normal.
Of course.
What I find interesting is the strength we're seeing in other sectors, like consumer staples.
Let's look at that a bit more.
Okay.
Nvidia's dip after China's investigation isn't unexpected.
Definitely not, especially with their position in AI.
But the ripple effect it's having across tech that suggests something bigger is going on.
You're right, the investigation is significant.
It seems like it.
And it did send shockwaves through the industry.
Along with that, we also have the Advanced Micro Devices ratings downgrade.
From Bank of America.
Right.
Which paints a pretty bleak picture for semiconductors in the short term.
So is this an overreaction to external factors or a deeper correction?
That's the question, isn't it?
Should those of us with tech holdings be concerned?
It's important to remember that regulatory scrutiny and analyst opinions are just two pieces of a very complex puzzle.
That's true.
They can introduce volatility, but they don't necessarily dictate the long-term trajectory of a company or sector.
We also can't forget about Comcast.
And the projected loss of broadband subscribers.
That's a pretty big development in the communication services sector.
It does make you wonder if we're reaching a saturation point in the broadband market.
Is this a Comcast issue or a broader trend?
It could be a sign of changing consumer habits or increased competition within the industry.
Now, in the middle of all this, we have consumer staples showing surprising strength.
It's a fascinating contrast.
For sure.
Some sectors are experiencing uncertainty,
right,
while consumer staples are proving their resilience.
Like Hershey's potential acquisition by Mondelez.
Exactly.
Why are consumer staples bucking the trend?
It suggests that in times of economic anxiety, people prioritize essential goods.
So does that signal a degree of caution among investors?
It might.
So we have tech and communication services struggling while consumer staples hold their ground.
It does point to a certain level of apprehension in the market.
Is this a sign of a larger downturn?
The upcoming inflation data might give us a clue.
Both investors and the Federal Reserve are waiting for those numbers.
They are a key indicator for the Fed's interest rate decisions.
It seems like the entire market is holding its breath until then.
The CPI data will undoubtedly influence the Fed's decision-making process.
How much weight should we place on these figures?
It's crucial to remember that the Fed considers a wide range of factors.
Like what?
Employment data and overall economic growth.
So it's not just about inflation.
Not just inflation.
Speaking of employment, the recent jobs report showed an uptick in unemployment.
The jobs report is definitely something the Fed will be considering.
Could this influence the Fed's stance on interest rates?
A rise in unemployment can be seen as a sign of a slowing economy.
So that might give the Fed reason to pause its tightening cycle.
It might even give them reason to reverse it.
But haven't we heard some Fed officials express caution about easing up too soon?
The Fed is in a tricky position.
It seems like
they need to weigh the risks of persistent inflation against the potential consequences of raising rates too aggressively.
And triggering a recession.
Exactly.
Their recent statements seem to suggest a data-dependent approach.
They'll be closely watching various economic indicators before making any major decisions.
So they're walking a tightrope.
They are.
Carefully analyzing every piece of data before making a move.
They're trying to find a balance.
This uncertainty must be creating anxiety for investors.
It definitely adds a layer of complexity to an already complex market landscape.
Beyond these broader economic indicators, are company-specific developments also influencing the market?
There are.
Let's look into some of those next.
Let's do that. Workday's inclusion in the S&P 500 is certainly noteworthy.
It is a significant milestone.
It speaks to the market's confidence in the company.
Even with the recent turbulence in the tech sector.
Exactly, despite that.
Being included in a major index like the S&P 500 often attracts more institutional investors.
And that can lead to increased demand for the stock and potentially higher valuations.
It's a sign of recognition and validation.
From the broader market.
Then we have Interpublic Group,
a major player in the advertising world,
seeing a surge in its stock price.
Amidst rumors of a potential acquisition by Omnicom.
It raises some interesting questions about the future of the advertising industry.
It does.
Consolidation is not uncommon in mature industries like advertising.
If this acquisition goes through, it would create a giant in the industry.
How do you think such a merger would impact competition?
It's hard to say for certain without knowing the specific details,
I imagine it could lead to increased pricing power for the combined entity.
which might not be welcomed by advertisers.
It also raises concerns about potential job losses.
And a reduction in creative diversity within the industry.
It'll be interesting to see how this situation unfolds.
It will.
Stepping back from individual companies for a moment,
Okay.
it seems like we're witnessing a market where individual company news and broader macroeconomic trends are intertwined.
How can investors make sense of all this and make informed decisions?
Navigating the market effectively requires a multifaceted approach.
Staying informed about both macroeconomic trends and company-specific news is essential.
It's also crucial to diversify investments across various sectors.
To mitigate risks associated with volatility in any one particular area?
Diversification is often touted as a cornerstone of sound investing.
And today's market activity certainly underscores its importance.
Spreading investments across different sectors, asset classes, and geographical regions can help cushion the impact of market fluctuations.
It's all about managing risk and maximizing returns over the long term.
However, diversification alone is not enough,
Investors also need to stay vigilant.
and adapt their strategies as market conditions change.
Exactly.
Markets are constantly evolving, influenced by a myriad of factors.
What worked yesterday might not work tomorrow.
It's crucial to stay flexible and be prepared to adjust your portfolio based on the evolving economic landscape.
Investing is not a static endeavor.
It requires ongoing research.
Analysis and a willingness to adapt to changing circumstances.
As we discussed earlier, the upcoming inflation data could be the catalyst for the market's next major move.
The market is clearly in a state of anticipation.
Investors are eagerly awaiting those numbers.
And the Fed's subsequent decision on interest rates will likely have a ripple effect across various sectors.
Speaking of sectors, you mentioned earlier that the performance of certain sectors offers valuable insights into the market's overall health and sentiment.
I did.
We've talked about the struggles of tech and communication services and the resilience of consumer staples.
We have.
Are there any other sectors that you think investors should keep an eye on in the coming weeks?
Given the upcoming holiday season, the retail sector is one to watch closely.
That's a good point.
Consumer spending patterns during this period can provide valuable insights into the overall health of the economy.
The holiday season is often seen as a bellwether for the economy,
It is.
and retail sales figures can give us a glimpse into consumer sentiment and spending habits.
A strong holiday shopping season could boost certain retail stocks and signal a positive outlook for the broader economy.
On the other hand, if consumer spending remains subdued during the holidays
It could raise concerns about the strength of the economic recovery.
and potentially impact investor confidence.
Potentially.
So the retail sector will be a key area to monitor in the coming weeks.
It will.
Its performance could offer valuable clues about the direction of both the market and the economy as a whole,
The holiday season often provides a microcosm of the overall economic climate.
making it a period of particular interest for investors and analysts alike.
That's right.
It's interesting how seemingly different sectors, like retail and technology, can give us such valuable insights into the broader economic landscape.
The market is a complex ecosystem.
They're all interconnected.
Different sectors influence and react to one another.
Understanding those connections is key for investors.
It is.
As we wrap up today, I'm curious to hear your assessment of the market's trajectory.
Okay.
We've discussed a lot, from regulatory scrutiny and company-specific news to inflation concerns and the upcoming holiday season.
A lot of factors at play.
Where do you see the market heading in the coming months,
The market is at a crossroads right now.
facing both challenges and opportunities?
The upcoming inflation data and the Federal Reserve's decisions will play a big role.
So there's uncertainty, but also potential for growth.
Depending on how those key factors play out,
It seems like investors need to be prepared for anything.
agility and adaptability will be crucial.
Precisely.
Staying informed, diversifying investments, and maintaining a long-term perspective are essential strategies.
It has been a very insightful conversation.
It has.
Thank you for sharing your expertise
It's been my pleasure.
and helping us make sense of this complex market.
Remember, the market is constantly evolving.
Staying curious and informed is the best way to navigate it.
Absolutely.